The charts are whispering a new trend, a massive 40% upside target that promises a rally to 1,600 units. Whales are moving, and the technical setup is aligning for a major breakout. Yet, the broader market is weak, creating a perfect storm of opportunity and risk. What's happening with Shiba Inu? Let's break down the data and uncover the truth behind the bold prediction that has the entire community on edge. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The current market environment for Shiba Inu is defined by a sharp contrast, a bullish technical setup against a backdrop of broader cryptocurrency market weakness. This script will focus on the bold prediction from analysts who foresee a rally to 1,600 units, representing a potential 40% upside from current levels. The core of this narrative is the fundamental question of whether Shiba Inu can decouple from the general market fear and execute a technical breakout. The current price action is characterized by consolidation, which is often the final stage before a major directional move. The market weakness, highlighted by a low fear and greed index, is seen by some analysts not as a deterrent, but as a necessary condition for a high-conviction move, as it suggests the weak hands have already been shaken out. The analysis will delve into the specific technical and fundamental factors that support this aggressive price target. The major event today is the publication of a highly bullish SHIB price prediction that targets a rally to 1,600 units by the end of December 25. This forecast suggests a potential 40% upside from the current trading price. The prediction is not based on mere speculation, but on a detailed technical assessment that points to an improving structural setup. Analysts note that the current consolidation is a period of accumulation, with the price positioned above critical support levels. This prediction is significant because it provides a clear, high-conviction target for the community to rally around, even as the overall crypto market sentiment remains cautious. The forecast is a direct challenge to the prevailing market weakness, suggesting that Shiba Inu possesses unique internal strength that could drive a significant independent rally. The market's reaction to this bullish prediction is a slow, steady accumulation, defying the broader market's cautious stance. Shiba Inu is currently trading at 875 units, a figure that reflects the ongoing consolidation. The 24-hour trading volume stands at $229 million, and the market capitalization is over $5.2 billion. This volume is adequate, but a significant expansion will be required to confirm the breakout toward the 1,600 unit target. The current price is holding firm, which analysts interpret as a sign that the critical support at 800 units is being defended aggressively by buyers. The market is in a state of suppressed volatility, a classic pattern that precedes a major price swing. The key takeaway is that despite the general market weakness, Shiba Inu is showing resilience, a necessary condition for the predicted 40% rally to materialize. The technical evidence is the primary driver of the 40% upside target. Analysts point to the moving average convergence-divergence histogram as the most compelling signal, which is showing a clear bullish momentum, indicating that underlying buying pressure is beginning to outweigh selling pressure. The relative strength index is currently at 49.7, sitting in neutral territory, which is a healthy position that allows for significant upward movement without immediately becoming overbought. Furthermore, the price is positioned above a critical support level at 800 units, which must hold to keep the bullish thesis intact. On the fundamental side, the token's deflationary mechanism is accelerating, with the burn rate spiking over 1,800% in the last 24 hours, removing over 35 million SHIB from the circulating supply. This combination of bullish technicals and a strong fundamental tailwind provides the structural rationale for the rally to 1,600 units. The implication of the 1,600 unit target is profound. It suggests that Shiba Inu is on the verge of a significant trend reversal that could lead to a 40% gain. Analysts suggest that the current price is a high-conviction entry point, with a clear risk-reward profile. The primary hurdle is the immediate resistance at 1,200 units. A successful break above this level, confirmed by a surge in trading volume, would likely trigger a massive wave of algorithmic buying and short covering, propelling the price toward the 1600 unit target. The current market weakness is seen as a positive implication, as it means the rally, when it occurs, will be driven by high-conviction buyers rather than speculative froth. The risk is that the broader market weakness could still exert downward pressure, but the technical setup suggests that the internal strength of Shiba Inu is now the dominant factor. The Shiba Inu community, the Shib army, is reacting to the 40% upside prediction with renewed enthusiasm, seeing it as validation for their long-term belief in the project. Community trackers show a heightened focus on the ecosystem's fundamental developments. The massive spike in the burn rate is a major talking point, as it directly addresses the supply side of the tokenomics. Furthermore, developer hints continue to focus on the utility of the Shibarium Layer 2 solution, with ongoing work on a major privacy upgrade in partnership with Zama. This focus on utility and deflation provides the fundamental narrative that supports the technical prediction. The community's sentiment is one of cautious excitement, with many retail investors preparing to enter the market on a confirmed break of the 1200 unit resistance, seeing the 1600 unit target as a realistic near-term goal. The short-term forecast, 1 week, 1 month, is dominated by the 1200 unit resistance. Analysts suggest that a break and hold above this level is the single most important factor to watch. If successful, the rally to 1600 units is highly probable within the month of December. Failure to break this resistance will likely lead to continued consolidation between 800 units and 1200 units. The long-term forecast, 3 months, 3 years, is exceptionally bullish if the 1600 unit target is reached, as it would confirm a major trend reversal and open the door to a retest of previous all-time highs. The key indicators to monitor are the MACD bullish momentum and the trading volume. A significant increase in volume on the move above 1200 units will be the final confirmation that the predicted 40% rally is underway. A balanced opinion must weigh the high probability 40% upside target against the prevailing market risks. While the technical setup is compelling, the current fear and greed index is still low, indicating a high level of fear in the broader market. This is the primary red flag. The risk is that a sudden sharp sell-off in Bitcoin or the wider crypto market could still invalidate the bullish thesis, potentially driving Shiba Inu back toward the critical support at 800 units. However, the risk is mitigated by the strong technical defense of the support and the accelerating fundamental drivers, burn rate, Shibarium. Investors should view the 1600 unit target as a high reward possibility, but must use a strict stop loss below the 800 unit support to manage the downside risk. The prediction is strong, but confirmation through volume and a break of the 1200 unit resistance is essential. The charts are screaming a 40% upside target, a rally to 1600 units that could define the rest of the year. We've seen the bullish MACD, the defended support, and the massive burn rate that fuels the fundamental case. The stage is set for a major move, but the market weakness demands caution. Keep your eyes on that 1200 unit resistance. The next few days will determine if the analyst's bold prediction is validated, or if the market will force us to wait just a little longer. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.